All right, everybody, how you doing? It is Thursday, October 15th. Yeah. Stock market rallied off the lows. Open week came up. So I'm checking the fiscal flows every day. Everything looks good, man. Green light to go. Flows are up over the same time last year. I don't see anything in the income tax flows. Corporation income tax flows up year over year. Individual income tax flows up year over year. Spending up year over year. Employment and withholding tax flows up year over year. So everything looks good. You got to keep buying the dips. Everything looks good. I know everybody's freaked out right now. You know, one day it's no stimulus, then the next day they're talking to, the stimulus thing is the same exact dumb headline trading that everybody was jumping into with the trade war and the vaccine. I take your money. Sorry. I mean, headline trading, you're just getting chopped to ribbons. You're bleeding money. The money's flowing into my pocket. It's flowing into the pockets of my subscribers. You got to understand what basic conditions are. That is the overriding thing. Those herky-jerky market moves every day based on the headlines, those are emotional traders. They lack any savvy or sophistication. They don't know what they're doing. And they're just jumping in and jumping out. I mean, it is a total lack of mental game. It is a total lack of strategy. It is so amateurish that, I can't even like come up with an adjective of how bad it really is. Anyway, the whole fiscal snapshot looks pretty good right now. It could change, we're still early into the fiscal year, but that's how it looks. The EIA Weekly Petroleum Status Report came out today. Now that thing had some mixed information in it. We had drawdowns in crude, gasoline, and distillate. Very big drawdown in distillate, by the way. I think it was like the biggest drawdown, and it could have been the biggest drawdown in close to 20 years in a single week. 7.5 million barrels in distillate, and distillate production is way down. So we're likely to see even more drawdowns in distillate. And if we have a real cold winter, especially here in the Northeast, we use a lot of heating oil, we can get some pretty interesting price action. The problem with that EIA report was we still see weak crude demand because refiner inputs, they're still low. And crude exports, man, they really fell. The last 2 weeks, they are down sharply. One positive note, jet fuel demand, that jumped up to the highest level in 6 months. Jet fuel demand. So that was a good sign right there. And I looked at the TSA, that's the Transportation Safety Administration. I looked at their website at total throughput. That's the amount of people, travelers going through their systems. And we're up about 14% in October versus the average daily throughput in September. So jet fuel demand's going up. TSA throughput shows number of travelers going up. That's good. The airline stocks are really beaten down. So that's good. What else is going on? 20 days or something to the election? 19 days? What's today? Today's the 15th. So yeah, 19 more days until the election. 19 more days until election. Dollar was strong today. You got to sell into the rally. Crude was weak, but then it kind of regained its footing on the rebound in equities. I think oil, right now there was some weakness in that weekly petroleum report, but if we see exports bounce back, crude exports bounce back, if we see refiner inputs pick up, you could have a really good pop in crude. You really could. What else is going on, folks? As far as yesterday's video that I made on the national debt, right? There is no national debt. If you look at that 27 trillion, what is it? That's 27 trillion of spending that the U.S. government did in excess of the amount it's stripped away in taxes. So that's like untaxed money that is in the hands of the non-government, which is being held in the form of treasuries, which is like a savings account of the U.S. government. So everything was paid for. There's really no debt. The sale of treasuries is a reserve drain. It is used to drain reserves from the banking system. I mean, we've had a lot of that in this last year. I mean, the treasuries account at the Fed is up to 1.7 trillion. I mean, that thing went for decades and decades without ever really going above 300 billion. And even 300 billion back in the old days, like the pre-pandemic days, that was considered like gigantic, you know? And now it's up to 1.7 trillion. That's been due to very high levels of Treasury sales. And why is that happening? I mean, you know, I can theorize why that's happening, because the Fed, through monetary policy, has been adding reserves and adding reserves and adding reserves. And spending, of course, has been adding reserves. Government spending has been adding reserves and adding reserves, right? With all the pandemic stimulus, Treasury has to sell bonds and notes and bills to drain out some of those reserves. So it's a reserve maintenance operation. Has nothing to do with borrowing. It's a reserve maintenance operation. So right now, 1.7 trillion sitting in the Treasury's account, and it's been elevated for a long time now. So that's it. Everything looking good. We're going to get a lot of volatility from the election. Don't you worry. Don't you worry. We're going to get a lot of volatility from the election, and there's going to be things to do. And you're going to get all this kind of crazy headline. If you think the headline trading is wild now with the, stimulus on, stimulus off, and the old days and the trade war on, trade war off, I mean, it's going to make that stuff look like, kindergarten. It's going to be unbelievable. All right, everybody, don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. The stuff I tell you here is really on the surface, scratches the surface of the information that I bring to my subscribers, not to mention the personal involvement, the mental game that I help them with, and the coaching and everything else. You need that. All right, see you tomorrow. Bye-bye.